Everyone's talking about the market obviously being down as much as it was, the largest drop since early 2020. But the real issue here, I think people are not really recognizing, and something I've mentioned in the past, is the US dollar. This is really the issue, all right? So obviously, the inflation number was the catalyst because this inflation number is just reaffirming that rates are going significantly higher. But the real problem for the Fed, for the US government, as a result of these rates going higher, is the US dollar. The US dollar is way too strong. And the effects of this strong dollar, the effects of interest rates, haven't even been felt yet, actually. We're going to see these effects on the real economy starting in the fourth quarter, October, November, December, into the first quarter. One of the biggest effects outside of the stock market, obviously, is going to continue to be real estate. Real estate is dropping all over the country. Again, if you're sitting in New York or Los Angeles, San Francisco, Miami, you don't see it yet, but the rest of the country is feeling it, and their prices are going down. Prices always take longer to go down than they do go up. People are very fast to sell their houses at the highest price, but when real estate prices start coming down, people are always quick to raise prices to sell their houses at the highest price. But when things start to cool and prices go lower, people are very slow to lower prices. So this real estate collapse is going to take 3 to 4 years, and it's going to be pretty vicious, I believe. Again, because of the interest rate and the higher dollar. The rates now are at 3.4%. We've got a ways to go here. Real interest rates are still negative. We've got 8% inflation, just about 3.4 in the 10 years. So we're still looking at negative interest rates. The Fed's got to go significantly higher to get to neutral. Even if inflation has peaked, which I think it has, it's going to come down. It's not going to come down to 2%, which is the Fed's target. Maybe it comes down to 4 or 5%, maybe 6%, but rates will have to go higher. They're talking now about 100 basis points move by the Fed. There's some pundit actually was talking about a 200 basis points move. I doubt the Fed's going to raise 200, but 100 is definitely back on the table. Another problem with yesterday's action, there's no liquidity. You think the U.S. stock market is the most liquid. It historically has been, but there is no liquidity left in the U.S. stock market relative to its past. So the market, when it gets hit with this kind of waterfall selling, will go significantly lower. We are headed for potentially, and I don't think this is, but potentially a 1987, October 19th, 1987 correction. And I call it a correction. It was a crash, but ended up long-term to be a correction. But most of you probably weren't even born or weren't around or weren't in the business at that time. I was a young kid back then. The market dropped, but down 22% for the day. If we were to see action like that, that kind of action flushes everyone because it takes out all kinds of leverage in the system. And by the way, there's a ton of leverage in the system, much more than people think, especially in the tech sector. So there's no liquidity. Stocks will continue going lower over time. I think people should start watching what I call canary in the coal mines. The one indicator here is Home Depot, which is an indicator not just for the stock market, but of the consumer and the real estate. Home Depot is down almost 6.5%. One of the largest drops that we've seen at Home Depot in a very long time. This has definitely repercussions for the real estate market, for consumer spending. So if there's one stock I would watch, it would be Home Depot as a canary in the coal mine. Again, I always talk about international. The real problems here with the dollar is overseas. There is global stagflation today. We have stagflation in Europe. China's technically in recession, not state of recession because their numbers are never real, but it is in recession. And the Fed's going to be forced into some steep action because of inflation, again, driving the U.S. eventually. We're probably in stagflation today, but we're going to be officially in stagflation by the first quarter. The one thing that no one's talking about as well, you've got QT, quantitative tightening, hasn't even started yet, really. You got $9 trillion of debt that the Fed has bought on the balance sheet. And the Fed has been printing money and buying bonds over the last 10 years to try to keep things stable. And yet GDP hasn't really risen much over the last 10 years on an annualized basis. And so the QE never really worked. But now they've got QT. They've got to reduce, because at the end of the day, with rates going higher, if you don't reduce your balance sheet, you're going to have major problems. And the U.S. does have major problems. They haven't even started selling mortgages yet. If the Fed were to start selling mortgages, mortgage rates would go even higher than they are today, which is 6.5%, which again will contribute to a residential real estate crash. The other issues, again, there was an article on the FT this morning about EU raising taxes on its oil companies. I mean, this is trying to raise 140 billion. I mean, this is another disaster. Oil companies, they're an easy target for everyone because of climate change issues. But at the end of the day, these are companies that have probably invested billions, lost billions of dollars prior to the last 2 years, are starting to recoup some of their investment, and now the EU wants to raise taxes. But this is typical. They're using this money to try to help the energy crisis, but it's not going to help. And you're having major issues in the EU, and you're going to continue to have major issues on the energy side. One interesting investment opportunity overseas. There's talk, and there's an article in the journal, but we've been seeing this trend. China and other Asian countries are investing a lot in northern Mexico. Why are they investing in northern Mexico? To get around the tariffs, because Mexico and the U.S. have trade agreements. This is very bullish for northern Mexico. There are a lot of listed real estate vehicles. I don't want to go into specifics that you can buy in Mexico to participate. There's also some consumer companies, but at the end of the day, this is very, very positive for Mexico, and really positive for the border towns in northern Mexico, with a lot of this investment coming in, jobs, job creation, investments in infrastructure, et cetera. Very, very positive. The other interesting thing is Mexico's very cheap. The currency's very cheap. Wages are very low, so you can hire workers for very cheap. That's another attraction. So there's some interesting opportunities. And the only problem is the government. AMLO, the president, is he's a populist. He talks a lot against foreign companies coming in. So he's an issue, but I doubt he's going to interrupt this trend. The last thing I want to mention is gold. With the strong dollar, gold and crypto are going to continue to be under pressure. I'm much more bullish on gold than I am on crypto, but at lower levels. I still believe the 1,400, 1,450, 1,500 range is going to be where you should be starting to load back up on gold right now. With interest rates probably going in the short term another 100 basis points on the 75. After that, gold is going to get hit and continue to trend lower, as will the cryptocurrencies. That's my views for today, and happy trading.